What is going on, everybody? Welcome to another episode of the Rapid Review. Appreciate everybody live over on X, over on YouTube. Yeah, and we're going to be doing what we do every single week, breaking down everything that went on in the overall market, industry groups, and look at some stocks, answer any questions anybody has, just get everybody ready to trade for next week. So, hey, volatility has returned. It's been a very, very interesting week. Events on the weekend causing more interesting stuff going on in the market. So yeah, let's break everything down that went on, and like I said, get everybody ready to trade for next week. All right. So as you guys know, disclaimer, read through it. Educational, informational purposes only, not financial investment or trading advice. All right, current state of the market. I'm still kind of working on how I want to label all this stuff, but this I think gets the gist of what's going on. Macro, we're in choppy market, arguably a downtrend. Excuse me. Given that we started to create those lower lows, we've been really living underneath the 50-day simple moving average, and we'll talk a little bit more about that when we bring up the charts. And then the micro trend, we are still in this rally attempt, and we had a follow through day. We'll talk about that. But yeah, other than that, we are working our way to see which way we're going to break from this point. Distribution days. So distribution days, they really should have been reset when I put myself into more of that corrective phase. I reset them when we had follow through day. So right now we're at 2 and 2. And if we're looking at exactly where those occurred, you have one on the 26th, which is Thursday, one on the 27th, which is Friday, on both indexes, both actual distribution days, and giving us the 2 count on that. All right. Looking at the week, S&P down 0.44%, NASDAQ down 0.95%, Dow down 1.33%. And for the year, 2026, S&P up 0.49%, NASDAQ up 2.47%, NASDAQ down 2.47%, and Dow up 1.90%. Looking at the moving averages, getting pretty red over there. We'll talk about some of the popping through and breaking back down of these moving averages, but the big thing right now, we are below the 50 on the NASDAQ, below the 50 on the S&P, and we're below the 50 on the Dow. The Russell just hanging on, 0.65 above the 50, and I reference the 50, especially for some of the more green traders. It's kind of like that momentum, real true like position trader type of moving average. Above that, we're trending upwards. Down that, we're trending downwards. 21 is something that I personally also use a lot, being that I kind of float on that position to swing trading style. And yeah, we've been living underneath that moving average as well, specifically on the NASDAQ. So let's jump over and take a look at what's going on with the indexes. So here we go. Oh, did I switch over? Yep. Okay. And as always, chat's open on both. So feel free to drop any questions, concerns, comments, whatever it is that you may have, and we'll talk through it. So looking at the NASDAQ, as I always like to start off and checking it out on the daily, you can see that we ended off last week just as we kind of started from last Tuesday up until Friday, the 20th, starting that kind of rally. Friday was that first day. The 20th was the first day that we could have had a follow-through day, but we didn't get it. We kind of chopped around sideways right around that big up day on Friday to begin the week on Tuesday and Monday. We were able to retake the 10-day simple moving average, which is a positive sign, and it looked like we were starting to form this kind of area where we were seeing some resistance to the downside. Very, very positive. On Wednesday, big gap up right at the open, got above the 21, and then climbed throughout the day, closing near those highs. And with volume higher than the prior day, we recorded that follow through day. At this point, I started putting a little bit of very little exposure into the market just to kind of test and see how things were working, but still understanding that, follow-through days do fail. So just an opportunity to say, okay, we're getting some buying power coming into the market, giving you the green light to start testing it and let the market then from there pull you in. We were still below the 50-day simple moving average, which was a major concern for me. We're still below the Monday 9, the February 10, and the February 11th, that kind of high region over there, which was another area that I was expecting to possibly see some resistance, giving me a little bit of concern. But needless to say, when you get that follow through day, when you had that buying power coming in there, our job is just to not try to predict, just to test and see what's going on with the market, because that is what brings us back into the market when we've been sitting in cash. But we ended up having Thursday. Market rolls over, really, really volatile intraday. Intraday actually broke not only below the 21, but also down below the 10, which was underneath the 21, but then kind of closed in that mid-range for the day. Where are we at with the range? Yeah, closed 47.32% range for the day. And then that was just one of right after a follow through day, getting that kind of distribution coming to the market. Never, ever a good sign. Never a good sign. There is actually a statistic. There's been a lot of numbers thrown around. So I'll just keep to, there's a very high likelihood of a follow through day failing when you have distribution coming into the market 1 or 2 days right after that follow through day occurs. Does not mean that the follow through day is negated. Does not mean this rally is negated, but it is just something to put in the back of your mind. I end up getting stopped out of my position that I had put on Wednesday. And now I'm just kind of sitting patiently in cash, waiting to see which way this market wants to go. If things do perk up and if positions do look very appetizing, I will take positions. But for now, this was a day where I said, okay, we had some distribution coming in the market immediately after the follow through day. We broke back down below that 10-day simple moving average. We broke back down below this 120 low, and just real volatile day, real high volume. And then on Friday, we saw that continue as we broke officially and closed below that 10-day simple moving average, continued to go down lower. Did find support at those 3 days that we were talking about, the 20th, 23rd, and the 24th of February lows. So seeing some kind of building of resistance at that area, which is a positive sign. But needless to say, this is just not a very good way to end off the week with a ton of volume pouring in as we kind of declined and got down back into this range where we were trading for the last week or so. Adding on to just things that are a little concerning is, we have been in this overall downtrend, right? You can draw a trend line for somebody who wants to do that. And we have just basically been continuing to trend down. The volatility has really increased, and even the follow through day, not a lot of volume coming in. It was above the prior day, but really truly average volume on that day. And I am not sharing my screen. Oh man. All right. All right, we're gonna go through this quick because my cursor was moving around a lot. I apologize. That is 100% my fault. Thank you for bringing that to my attention. All right, so quick synopsis of what we're looking on. NASDAQ daily. Had the rally day on the 17th. Kind of traded in this tight range, not this week, but the prior week. Started to see where we were just, like I said, trading in this choppy range. We were then able on Wednesday of this week to gap up. Volume was higher than the prior day. We got above those moving averages, and we saw that follow through day. That follow through day then was followed up by these 2 distribution days. Following up with not 1, but 2 distribution days makes a high likelihood, high probability that this follow through day fails. So that's just kind of a quick synopsis of what I was saying while my screen was not being shared. So I apologize for that, guys. But yeah, thank you for bringing that to my attention. And like I was saying, the big thing too, like that follow through day, yes, it was on higher volume than the prior day, but it really truly was at about average volume. And then really just looking at like this thing overall, right? We can look at this kind of on a weekly even, right? trending upwards, nice clean uptrend, a couple blips here and there when you're looking at the weekly, but especially looking at the weekly, you can see that towards the end of October, that's really where this volatility started to increase. You see some of these weekly bars getting like much wider. We see just the chopping sideways through this market. Things did tighten up, and then we got kind of again choppy, and then we're starting to now we're on the third week of really living below that 10-week moving average. And then also other thing with the daily too. So on my chart, I keep my volume fairly simple. I got a 50-day simple moving average on that volume, which is the white line. The white bars are down days, the blue bars are up days, but any of the highlighted bars are days that occurred on above average volume. And, you know, when you start looking back here, right, as we were beginning this uptrend, there's a lot of blue days, right? A lot of blue days as we're going through this uptrend. Things kind of mellowed out, which, to be honest, a lot of times this happens given that August timeframe where a lot of people are on vacation. Just kind of is what it is. Going into September, we started seeing some of that volatility increasing as we continued to rip higher. And then all of a sudden, right in here, we started seeing, right in here, we started seeing a lot of that distribution coming in as we started going higher. We broke down. We saw a lot of that volume dry up towards the end of the year. Things got tighter. And now we're seeing really, this is what's from the beginning of the year, there's just a ton of above average distribution coming into the market. And that's also what we're seeing within the distribution days as well, when we're tracking those and starting to see some clustering. So sometimes just even panning out and like you can get so caught up in what's going on in here and just taking a look at just things overall, it becomes like a lot clearer, right? That we were in this clear uptrend here. We got in this range bound choppy area. The volume was good here. The volume started getting mixed here with some signs of distribution coming in. We saw things dry up a little bit as we tightened up, and then the volatility increased, and we're seeing a much more downside volume as of late, really as of the beginning of this year. So, like I said, that step back I think is very important to take sometimes. On the upside, the big thing to really concern yourself with, I think, is the 50-day simple moving average, and then also the highs of these 3 days right here. On the downside, the main thing I'm looking at is that rally day. Between these kind of ranges, we could just continue to chop around. But which way we break from there could be a big telltale sign of which way this market wants to head. Further on the downside, really keeping an eye at the 200-day simple moving average, as I think everybody does. That is especially one of those big moving averages that most people in the market are keeping an eye on. And then we're also looking at that Friday, November 21st low. And then obviously on the upside, you got these all-time high areas over here too. Let's look at the S&P. S&P's definitely been performing much better, right? It's something we've been talking about every single week. It's clearly outperformed the NASDAQ no matter which way you kind of look at it. The moving average has really started to converge. We did get the break of the 10 and the 21 below the 50, which is not really a good sign. But there was just some clear resistance happening at these all-time high levels. You could just see how many times we peaked above this October 29th area, rejected. Tried to get a little higher, rejected. Tried to get a little higher, rejected. Got about just below there, rejected. We're just constantly trying to get above this level, get above those old times, and just constantly getting rejected. Same thing, seeing a ton of downside volume coming in over here. Again, we have the 2 distribution days following up here. You have the... technically not a follow-through day, but a big up day with some volume, and then having the follow-up 2 days of distribution right after that. Not as bad with the lower lows that were created, but still, needless to say, we're below that 50-day simple moving average. And as much as the chart itself is hovering much closer to all-time highs, isn't really breaking down as much as the NASDAQ, things don't really look that great here as well. Like I said, just a lot of volume coming in on the downside around here. And again, when you pan out, it becomes a little bit more clear. Yes, overall, we've been trending in this macro uptrend, but you can just see the difference in volatility from what it was like last year to what it's been like since the end of October. So, all right, I'll bring up the Russell just because those small caps are definitely acting a little different as well. Again, volatility increasing, but overall, this has just been holding above that 50 pretty well for most of this year, which has actually been a very healthy sign. So this looking a lot better in terms of what the overall indexes are looking at. But for me, this isn't a signal that like, okay, I'm good to buy in this market. When the overall indexes look like they've been looking and are starting to get below those 50-day simple moving averages, and there's a lot of selling coming in on all three of those indexes, not a market that I really want to participate in. So, all right. So next up, let's jump over and start looking at some themes. So we'll jump over to Deepvue. For those of you who don't know, I am a Deepvue partner. This is the tool that I use for all my stock screening and basically all of my chart analysis and everything. Lots of great features, and some of them that I have up on the screen, you guys can get to take a look at. Maybe that'll be something that's interesting to you, because if you do want to check out Deepvue, excuse me, link in the description of YouTube with a annual discount code, and on X it's also in my bio, so you can check that out. All right, so let's do a little top-down analysis, right? We talked about the overall market. Let's talk about what's going on with the sectors. Down here, I got your spider sectors over here. We're sorting them right now by relative strength, so comparing to the S&P and on a 1-week time frame. There it is, Utes. Maybe stretch. I wonder if you're in here. But Utes, if you know the movie, great. If you don't, figure it out. So that's leading out the week, showing the most strength over here. You have the daily over here and the weekly over here. Consumer staples also showing some strength as of lately. Healthcare has been one of those weird, like the pattern itself when you're looking at the weekly, like there's this big cup and this kind of like wedging style handle going to the right, as there's just been some resistance at those all-time highs. I wouldn't even call this a handle as much as I would just say like this consolidation happening right at those all-time high levels. And kind of a mixed bag within the healthcare industry. I think biotech's really showing a lot of strength in there in some aspects. Some aspects they're completely crumbling, some providers crumbling, but it's a real mixed bag within the healthcare industry. Energy. Energy, not one of the top leaders for this week, but energy has clearly been one of the leaders within this market. Whatever it is that you want to attach the story to is up to you. To me, I really don't care. Whether you're talking about Venezuela, war stuff, and what's going on with oil, driving the prices of oil up, whether you're talking about this is what's supplying AI and the investments into energy so we can actually take advantage of the new AI world that we're trending towards. Regardless, energy has definitely been one of the strongest sectors that we've seen, especially this year. Communications has definitely been popping up and showing a little bit of strength. It has been in this consolidation phase, but I've definitely seen a little bit of strength, especially in the telecommunications side of things. Materials, you can see materials also trending upwards. Not the greatest week this week comparative to the others, but overall trending upwards. Real estate, another one of those that looks like it's starting to try to trend upwards. It's still in this kind of consolidation phase on the macro trend, but definitely showing some strength and getting a little bit of flagging going on right here as well. Industrials, same. And then we start getting into what's kind of collapsing, right? So I'd say from industrials up, these sectors really have been, looking like they're showing more strength. And then now we start getting to consumer discretionary, living below that 50-day simple moving average, really starting to trend downwards. And even on the weekly, starting to break below that the 20-week moving average. So not a good sign there. Technology. I know some people are like, oh, technology's perking up. Technology's showing strength. Sure, semis. Some of the semis were looking somewhat healthy, but when you look at what was going on in the technology sector overall, like some of these really strong couple days in the macro trend of looking at what was going on, and this looks like it's starting to roll over. We're really living below the 50-day simple moving average. Not looking pretty. Financials not looking pretty. And that's where we got. So that's just kind of a quick overview of what's going on in the sectors. Definitely some more defensive names and defensive industries starting to show some strength. And this is actually a good opportunity to bring up Chad over in Discord. Chad, you had asked, let me quote exactly what you had said. He said, here's a question. Does war commonly cause market reactions in certain sectors? I've heard it's good for the economy. For those of you who know me, I try to keep the news as far away from trading as possible. If you just look at what we just kind of went through between the overall market and between what's going on in these sectors, and we'll also see it a little bit when we go on the industry groups. I did not have to mention anything about the news to see this stuff going on, right? There, to me, everybody can put different stories and different reasons for what things are going in the market. In terms of trying to use news to predict, there's just too many factors going on in the world, whether it be politics, global economics, weather, industry changes, companies, like policies. There's so many different factors going on within the world, and then the market is a supply and demand market. It is based on the decision that people make with their wallets. For you to think that gathering all that information, you could essentially predict what everybody is going to perceive that information as and what bet they're going to make with their money is just it doesn't work. It's not something that is you can actively trade upon, right? And things happen and change drastically, right? One day we're at war, another day things are sounding like they're better, another day there's this issue, that issue, this is great, this is horrible, AI is doing good, AI doing bad. Excuse me. So it's a lot of noise, and it's very, very hard to make trading decisions that make logical sense just based off what's going on in the news. So rather than mud up my head with all of those thoughts, I rather just look at the pure facts, pure data. What is on my screen? What is the market telling me? What is the trend? That is going to direct us much, much clearer and much, much more actionable in what we can do with the information than sitting there and trying to look at the news and look at different angles. I mean, just look at in America, look at how many different things go on in the world, decisions, policies, whatever it is that are being made, and how you have two completely opposing views on the same exact topic, and even the facts from both sides varying so greatly. Someone saying this is fact, someone saying this is fact. Like, getting that stuff out of your trading, I think makes things much, much clearer. I know a lot of people, just the average person, right? You sit down and you're at a cocktail party, you want to be able to like have the conversation of, oh, this is going on in the world, this is how it's going to affect the market. The fact is, nobody really knows. It's just all a bunch of BS. And nobody wants to sit here and be like, oh yeah, well, utilities is trending upwards, so that should be like, that's just not exciting talk to somebody while you're sitting down having a beer. So yeah, that's my kind of take on that, Chad. I think that's a great question because I know it's constantly talked about. Yeah, sure. If we do go into war, could it affect certain industries? Absolutely, naturally, yes, that's going to happen. But to me, a lot of that stuff is going to show up in the charts just by looking at what's going on with price and volume, and that's where I stand on that. So with that being said, let's jump into the theme tracker. This is a quick and easy way to just take a quick look at what is going on within the themes across various time frames. We got weekly, 1 month, 3 month, and year to date. Year to date, look, the miners have definitely been showing a ton of strength. Oil and gas definitely showing a ton of strength. Telecom is an industry that has definitely been perking up as well. From the growth stock side, right, we are seeing growth stocks. We are seeing semiconductors. And solar was starting to show some strength throughout this year. So those are a couple of industries that really stood out to me as of late for this current year. What we are starting to see, really, honestly, I don't see much divergence happening from the 1 week, the 1 month, and 3 month, and the year to date. I continue to see those miners really showing strength. I continue to see utilities showing strength. I continue to see telecommunications showing strength. Very similar to some of the stuff that we were seeing within the sectors. I think the standout groups to me coming in really was just a lot of, like I said, the energy stuff and semiconductors out of the tech industry was looking the strongest, but things kind of did very much change this week as we can saw semis dropping towards the bottom over here, solar dropping towards the bottom over here. So that's the big divergence that I was seeing. When you start looking at these bigger time frames, you see semiconductors over here, you see solar over here, and this week you could see that they got hit the worst. So we'll see if that trend does kind of start to continue. All right, so let's jump over now to my ETF tracker. Daily, weekly. Let's look at I'm going to look at the 1 month, right? We're going to look at the 1 month on this side. So again, daily, weekly, we'll go through the 1 month. We'll go through like the top 90, oil. This is some cargo stuff. This is, which one is this? This is utilities, telecommunications, Japan, infrastructure, trending upwards, oil refineries, food and beverage, which is falling into that consumer staples area, infrastructure, real estate, agricultural business, which with the agricultural business, you can see it's starting to really trend upwards there. Manufacturing, transportation, global robotics. So a little bit of AI stuff in this. Steel, which falling into those, the kind of infrastructure, home builders. Home builders getting hit this week. Still kind of in this consolidation phase. And now we're going into 80. And then, which one is this? Energy, transportation, storage, processing, all trending upwards. So seeing a lot of the same things. You're getting a little bit of a a peek as to what's showing strength. Where this really comes in handy is when like the whole technology sector is really, really doing well, and seeing exactly what in technology is outperforming. Right now with a lot of these more defensive names, we're seeing kind of very similar to what we're seeing within the sector side, just a little bit more granular. Just looking at those miners, yes, miners had been showing some relative strength in the last day, the last week, but in that 1 month time frame, we did start to see some weakness. But in the bigger time frame, we're still seeing strength, and a lot of this looks as if what we're getting was just a kind of consolidation, a break, a healthy pause, and what was a big uptrend, really dating back all the way until the beginning of last year, and just maybe getting one of those chances where this is taking its breath and letting things catch up to it. Same thing kind of we're seeing with silver. So yeah, something to add on to that is just like I said, the miners maybe not showing up in the 1 month strength, but when and this is why I have things listed across here with all of those, I could take a look and be like, okay, it's just in this 1 month time frame, and then I could also see, on the chart what exactly is happening and looking at things from just a pure trend analysis. All right. We're going to talk exposure levels. I don't know if anybody has, but if you have stocks, we'll talk about those too as well. So exposure levels. I kind of said it before. To me, this just isn't the market to be playing around in. It's choppy. We've created lower lows. There's a lot of distribution coming into the market. The volatility just in general is just not the type of market that a lot of us traders really want to be in. It's important to remember, right? And I forget who, people use these terms a lot. Somebody in Discord had mentioned this. You have, we're momentum traders is essentially what we are, whether you're swing or position. We're looking for the trend. We're looking to jump on that trend, ride that upward momentum, that outperformance of the market. And in a market environment like this, being a momentum trader is very, very difficult, whether you're swing or your position. Maybe on the position side of things, if you have some positions that are holding up well and that are leaders and haven't hit your stops, you may have some exposure in those names. But regardless, when you start seeing, to me at least, when you start seeing so much pressure coming into this overall market and really just things starting to get very, very choppy and starting to trend downwards, I don't want to have heavy positions, even in my biggest names. If I'm somebody that has a big position in even one of my big leaders, you got to know that there is a reality of that stock reversing. For some people, that is completely fine. You got traders like Jim Roble, who they're real optimistic, longer-term position traders. He knows that, yes, at times he's going to give back what was 100-something% gain to stop out at a 30. He's fine with it because he knows in certain markets and certain times, he's going to, instead of taking 100% gain, he's going to be taking a 1,000 10-bagger type move sometimes because of how he rides those trends and because he is a little more of a bigger term position trader with the wider stops. But it's all about knowing yourself, right? There's pros and cons to both. to the really short-term swing trader, and then to the longer-term position trader and everything in between. They're both going to have times where they outperform the other. They're both going to have benefits. They're both going to have things that are negatives on their side of things. But I think regardless, right now, it's exposure levels should not be high, given what's going on within the market. Again, I'm personally in cash. I'm sitting out. I'm not shorting anymore. It's just a market right now where we're in that kind of range bound area, like we were showing on those charts, trying to figure out which way we're going to break. And that sit out power is extremely important. If you look at some of the best traders, they have a very, very strong sit out power, and they don't trade every market. And they know that they can make their year in a few good months. They don't need to be trading constantly. Amateurs trading constantly, getting death by 1,000 cuts, hemorrhaging not only their actual physical capital or financial capital, but also worrying about their mental capital. And then when that big, strong market does come around, they're not dialed and they're not able to take full advantage of that. So, again, be patient. Don't overtrade in this market. Be very, very selective. And look, things could change quickly, right? We talked very much like this last week, and then we got a follow through day, and I was willing to take positions. And that's how you have to be. You have to be nimble. You have to be able to say, this is where I was based on the information I had. The information has now slightly changed, and I now need to adjust and switch my position. You can't be a perma bear. You can't be a perma bull. You have to ebb and flow with what's going on in the market. All right. Jump back to Deepvue. Nobody dropped any stocks in here. Let's just look at some of these bigger names. NVIDIA. So Thursday and Friday were rough, man. This thing was looking much, much healthier, as it was looking like, all right, maybe we're bottoming. Maybe we're starting to form a nice big base. Maybe this is starting to turn around towards the follow through day time. We're starting to get back above and live above those moving average. We had that higher low kind of created. Then we kind of broke above a lot of the peaks that we had through here, starting to look like we were building up that right-hand side, and then faked us out, rolled right back over, and now we're starting to get right towards that 200-day simple moving average. So really, really ton of volume pouring into this one. This obviously has a heavy weight in what goes on in the overall market, but not a good sign. And we saw that with a lot of the semiconductor kind of stocks. So if we kind of come in here, and this is what I love about Deepvue, I have the semis. How did I open that? There it is. I brought up the semiconductor sub-industry group, and let's just jump really quickly and look at the weekly. Actually, maybe daily will kind of show a bit more of the action, but yeah, some of these names, right? SITM, like this one, looking a little bit better, right? Looking much more healthy. So you can see some of these names trending upwards, showing some strength. And then you have some of these names like AMD, Avgo, which is Broadcom, A-Lab. So kind of seeing Credo, big one from last year, and a lot of these other names. As you start to go through, you start to see like it's kind of a mixed bag. Yeah, there are some names showing strength, but there are other names kind of rolling over. With that being said, the names that are showing strength, definitely pay attention to those names, because if the market does relieve itself of this downward pressure, the ones that are not being sold by these big institutions are very likely going to be those leaders. All right, cool. Chad wants to look at Rode. Yeah, right off the bat, falling into the industries and sectors and things that we are seeing a lot of strength in. The stock itself doing just that. The fundamentals, right? We're looking at the earnings. We're looking at the sales. Let's close this up right here. We're looking at the earnings. We're looking at the sales. We're looking at institutional sponsorship, kind of giving a nice steady climb. Looking at an okay ROE. We're looking at good relative strength. So from a fundamental standpoint, this is looking extremely healthy. This is looking good. From a technical standpoint, looking at the weekly, right? We had this macro uptrend. Then we kind of have this nice big base that we formed right here. And the depth of that base is just, textbook 30%, like right around that 30% textbook correction that we had since like that end of September. And then we've kind of gone sideways for multiple months. And on the weekly, right, we have this, as we went up the right-hand side, we got a ton of volume pouring in over here, which is a good sign. More volume coming here, or as we started to get near those all-time highs, and now we've kind of paused and right at those all-time highs. And when we look at things on the daily, not so much where we're getting a handle, I would say, but maybe kind of more of like just this tight consolidation right at those all-time highs, and looking very, very healthy. Looking right now like this, once those moving averages are kind of catch up because of how rapidly it broke out on earnings, up 11.22%, right at those all-time highs, kind of sitting there and kind of pausing. So if you are going to take positions, like I like stuff like this. I like stuff that is leading in the groups, the sectors, the stuff that is continued to trend upwards, that has these nice textbook bases, that is looking like it is pausing right below those all-time highs and starting to tighten up, and is hopefully allowing these moving averages to catch up. So this is the type of name that I think is definitely worth watching if you are looking to take positions. Look, some people, they only like to trade growth stocks, and when the market isn't trending in their direction, they prefer to kind of sit away than to play some of these names. But this is one of those names that fits all those growth characteristics that we normally look for in terms of fundamentals, and is looking pretty good. So yeah, this is definitely a good name. I really, really like what this is doing constructively on the technical side of things. I like what it's doing on the fundamental side. And like I said, it falls into those groups that we're starting to see a ton of relative strength in. And yeah, great bring to the live stream, Chad. Appreciate it. All right. I'm assuming there's not going to be a ton of names. This is like my older watch list. I'll go through a couple things. Vert is another one of these names showing a lot of relative strength. So I'll flip through some of these real quick. The big names that I've been really, really watching that have been doing very, very well given what's going on in the market is your MU, right? We've seen this just completely rip higher and higher and higher, and then now it's paused. It's corrected less than 20%. It had that rapid correction, and now it's started to kind of tighten up, and it's just been kind of hovering in this sideways action, in this sideways pattern, feeling like the market is the only thing that's really preventing this from skyrocketing again, which is great because that gives us the opportunity to hopefully get into a name. So MU is high on my watch list. Along with that, SanDisk, another one, very, very similar pattern, another one that's just ripped like crazy higher, going. Did give it this consolidation here over in the November timeframe. Luckily, I was able to catch this coming out of this like handling area over here. Ripped. I don't own a position right now, but now it's starting to consolidate and possibly give me another chance to get back in on this one. We already talked about this one. SITM showing some relative strength. Looked like it tried to break the downtrend, but then returned back into that downtrend. So this is another name that I'm keeping an eye on. UU, not your traditional cup with handle in terms of the percentages, but overall looking at what's going on with this pattern, I like to see this cup pullback handle, volume clearly severely declining, finding some support right around those moving averages, specifically the 50. STX falling into that same category as SanDisk, looking very healthy. And what else did I have in here? DigitalOcean. This one was looking like it was showing a ton of relative strength, but things change, right? Now it's down below the 50. Still want to keep an eye on this and see if we do get like more of a pronounced base as it takes a break from there, because of how much relative strength it was showing, but just a name I wanted to highlight. Yeah, other than that, those are the kind of big names that I wanted to highlight. Those memory names, data storage and stuff, that seems to be what's showing the most relative strength within the tech side of things. So yeah, that's really where from the tech side of things, that's where I'm keeping my eye on. And if we can hold those patterns, create those tight areas, And then if this market ever does decide it's going to turn around in the short term time frame, those are the kind of names that I'm really trying to focus on getting some equity into. All right. Know the names, know the suggestions. Not surprised given what's going on in the market. So let's just close this out. I know there's a bunch of people that kind of jumped in towards the end of this. Look, to summarize where I'm at right now, I don't care what's going on in the news in terms of my trading. I am looking at what's going on in the overall market. I'm looking at what's going on in the sectors. I'm looking at what's going on in the stocks and the industry groups. And right now, it's just more of a risk-off environment, mainly due to the amount of distribution that's coming into the market, the resistance that we're seeing to the upside, and just a lot of the volatility that we're seeing. So because of that, I'm in cash. I'm being patient. I'm keeping an eye out for the names that we just kind of looked at and things that are showing really, really strong relative strength, that if the market can relieve the pressure off of these names, they could likely go on another leg higher. And my main goal right now is to keep my mental capital all nice and full, and to really make sure that I'm continuing to focus on what is going on with these more relative strength names, having a really, really strong watch list. Times like this, especially if we can even get a deeper correction, which is, I'll be honest, a little bit what I'm hoping for, makes this so much easier, because those names that the big institutions are not selling are much, much more clear when we start trending downwards more. And that makes it much easier when the market does turn around. And then that's the kind of last thing that I'm keeping an eye on. Keep an eye on what's going on in all those areas as well, to see if we can start seeing some signs of some institutional money going into the market and things starting to turn around. Specifically for me, that's really the follow-through day signal. And yeah, if that starts happening, I start buying into the market. I start allowing the market to slowly pull me in. I don't go from 0 to 100% or on margin invested. I just start taking little dabs at the market and allow an uptrend to slowly pull me in. And yeah, that, if for anybody who was trading last year, we had a very, very similar environment. We started off the year super, super choppy. There was some money to be made, but it was not easy. Things rolled over. Things looked brutal. They turned around, and it was an amazing year. It was a year where you could have made a good amount of money in the market as we started to turn around and trend upwards, and there were names that just continue to rip higher and higher and higher. If we can repeat that again, great. And again, I know everyone would say, well, there's this in the news. It's midterms. It's this, the Iran war that we're dealing with right now. Like, I don't worry about that. I block all that out, and I just look at what's going on in the charts, and that's going to tell me where people are putting their wallets, right? And that's what matters the most. Talk is cheap, and money and where people are investing is going to tell us much, much more and give us more actionable things and more actionable data to make trading decisions on, versus being, some of these just news articles. And I'll reiterate this one more time. When you look at what's going on, and I'm not getting like political on this, but when you just look at some of the things politically that's going on in the U.S., right, and how vastly different the stories can be from opposing sides of an opinion on something, how the facts from both sides can be vastly different. Why would you factor in stuff like that and politics and all these different things and news events where the perception of what it is, good, bad, indifferent, is so vastly different, and then try to put that into something like trading? To me, it's extra noise when, again, price and volume, that's going to tell you where people are actually putting their money and making their bets and where they believe things are going. So focus there and just reduce the noise and save a lot of what's going on in your head, because it can be much, much more difficult to trade when you really start factoring in all of the news and all of the stuff that's going on. Ken, anytime. For those who don't know, my family and I guess a lot of people think I look like Vincent Trocheck, who just won a gold medal. And yeah, so that was the is it Troch comment that he just threw over there. If you agree, like this. All right, that's all we got. as you guys know, if you're over on X, there's the YouTube link where I save these replays. Full disclosure, if you're catching this, there was a little blip in the beginning where I didn't have my chart. So I was talking as if my chart was being displayed, but you guys couldn't see it. So just fast forward through that if you watch that replay. YouTube, if you want to follow on X, we got that up on the screen as well. Discord link, we're coming up now on 1,500 people in the free Discord. Just amazing group of people. You guys are absolutely legends. Some professional traders in there sharing their opinion, like Steve Sweats. So if you're floating around here, huge shout out to you, man. I really appreciate everything that you share. And just, yeah, there's a lot of good people in there that are just sharing their thoughts and also just asking questions. So even if you're a more senior trader, it's a good opportunity to just help out the community. And a lot of the reason I do this is because it's one thing to have these internal thoughts and things going on in the market. It's another thing to try to break all those thoughts down and put them into words and explain them to somebody who's maybe a newer trader. And it's helped me become a much, much better trader too. So I know for a lot of people that are more veterans in the market, they find that to be pretty helpful within the Discord channel as well. And like I said, it's all free. And YouTube, there's a link in the description. On X, you can check out the YouTube link, or you could just shoot me a message and I'll get you the link over to the Discord. Last thing we got going on, we got the 2026 Trader Madness bracket tournament going on. I did this last year. Last year it was based on people I would like to see Market Wizards books. It got a lot of hype. Not all I guess, positive hype because of some of the back and forth that went on between some of the trader communities on who's in there. But this year I tried to make it a little bit more fun. Every account is under 75,000 followers, and they're people that I just honestly think don't have a big enough following that deserve to have much, much more followers. And with the goal of just sharing these people with everybody, people can go through the bracket, check out some of these names that they may not have seen before. And then for some of their people that have like a top trader that they really enjoy, somebody that they really want to support, they can go out, they can vote, and hopefully watch that person move up through the bracket. And then at the end, we'll get, a winner just for fun to show, who won this year's bracket. So that was kind of the basis of this bracket. Like I said, it was really fun last year. So yeah, check it out on X and vote over there. Drop some comments, give some shout outs to the traders that you like following. I know a lot of them are actually reading through the comments, and people will probably start commenting back too, so give you a chance to interact with some of these people as well. But yeah, enjoy that, and I'll keep posting that throughout this month. The winner will be announced at the end of the month. It's going to be done in batches, so there'll be a couple of matchups every couple days, and then I'll be giving you guys the results, and we'll keep updating that bracket until we get to the end. So cool. Appreciate everybody. Enjoy the rest of your weekend, and we'll be back in doing this next week as we do every single week.